All right. Can everybody see my screen now? Yeah.
Yep.
Great.
Good.
Excellent. Can everybody hear me now? Good on you, Shady. Thanks, Mark,
Yep.
Kevin.
Good.
All right, guys, let's do this once more. And I do apologize about Zoom. Zoom is playing the world today. Zoom has got us under their control. Jeff C is our speaker today. Jeff is a finance professional. He has more than 24 years experience in finance. He's ex-regional finance manager of IFS Solutions in Asia. He's previously the CFO, Chief Financial Officer at Microsoft in Vietnam, Southeast Asia for new markets. He was a partner at one of the largest audit firms in the world, KPMG in Vietnam. He has been a director at EY in Vietnam. EY is a big player in Vietnam. AVP, Assistant Vice President at HSBC, responsible for Premier Banking in Singapore. Everybody knows who Hong Kong Shanghai Bank is. He has been the head of ABB Asset Finance here in Singapore. He has been in auditing and tax advisory at KPMG in Malaysia and PricewaterhouseCoopers in Hong Kong. He is an entrepreneur, startups investor, and CFO in Asia since 2015. He has a big presence in both Singapore and Vietnam as an entrepreneur. Jeff is a certified practicing accountant, and he's also a CPA from Australia. Mr. Jeff C is a finance expert. I ask you all to welcome to today's session. Listen to what he has to say. He would be happy to answer your questions at the end. And at the end of Jeff's session today, he will open for questions if needed, and we will also share his presentation and the Excel sheets for you to take home and practice with. Everybody, give a big round welcome to Jeff. Jeff, it's in your hands now, mate. Welcome to the session and to BizTalk 42.
Okay. Thanks, everyone. Hi, everyone. Can everyone hear me? Good. Hi. It's the first time I join you all to share about financial planning, everything. So let me share my screen. Then But before I start, I saw there's a lot of people here. Can you type and see which country are you from? I see Vietnamese, I see Indonesian, but there is also a lot of people from different countries. Would be good. Can you type on the chat?
We have people from as far down as Nigeria here, Jeff. We have two ladies from Cambodia. We have people from Cameroon, mate. So you got an international audience today.
All right, great. Let me share my screen. Can you see my screen, everyone? Okay, hold on. Can you see my screen? Everyone, can you see my screen?
Yes, Jeff, your screen is visible. Yes, absolutely, mate.
All right, great. Okay, good afternoon, everyone. Also good to see the different time zone. My name is Jeff C. Thanks a lot, Wally, for sharing my profile. I know Spencer's, and I was asked to share about financial planning because of my background. So it's a great pleasure to be here today with everyone. And as I said, I saw there is tremendous amounts of people that are joining the call for today. It's a great pleasure and having this opportunity to share a little bit of my experience. I would say that hopefully the key takeaway is that start off of my experience that I share. Hopefully there's something that you can learn and to help you in your business. That would be tremendous. I would say again from everyone, right? Because from the beginning of my career, I was told by my mentor saying that when we share, we actually we kind of taking the experience from what the other people teach us, and we teach other people as well. So we basically just sharing of what our knowledge is. While you all please open your mind and listen, because I think when you listen, you learn something new. Definitely, there's always a takeaway. That if you can, out of this session, if you can take away one or two things from my sharing session 2 hours here, I believe it's a tremendous gain, because it's a stepping up of everyone as you go along the way to improve yourself, improve your the situation that you're in, and also your so-called your environment that you're at, right? Okay, and as I say, can I have a show of hand? Any one of you come from financial or accounting background? Yes, give me a thumb up. Yeah. Okay, I see some. Okay, good. Okay, let me go into the financial. As I slide said, I think financial plan is very key to an effective business plan. If you want to do any business plan, you don't get the number right, you can have a very good idea, but if your business is not growing, that's just not. Yeah. Is my slide move?
Your slides are not moving.
Not moving, yeah.
No, you need to, yeah, I think you need to click on the main screen and it'll move for you. We're having problems with Zoom today. I think there's too many people using Zoom these days.
Yeah, let me reach.
Yeah. Thanks, Jeff. I think you had the same problem I just had.
I think that's
It was working for you just before, mate.
Yep.
I think you have to move it on your original screen, even though you're projecting it to the other screen. Okay.
Yep.
If you go to slideshow and then full screen from beginning. No. No, slideshow at the top, on the top bar. No, top slideshow. Next one, transition, animation, then slideshow. This one. Just bear with us, guys. We'll get this fixed. Okay, try again, mate. It's okay. There's a Jeff. If you go across the top line, yeah, okay. You've got a file, home, insert, draw, design, transition, animation, slideshow. If you click on slideshow there, it should give you the option for full screen. Now go from the beginning. Okay, all right. Yeah, and okay, I'm not sure what. Yeah, okay, that's fine, mate. Go ahead. Yeah, go ahead.
Is the screen moving? Can you see?
Yeah, it's moving now, Jeff.
Okay, great. Now, screen. Okay, great. Okay, sorry for the little bit of hiccup. Beginning from. Okay, let's move. Okay. Just a little bit of recap. I believe some of you have the you also have. So I believe it would be good to have. So if you're some of those who attended last, say, 2 weeks ago or 3 weeks ago, you understand that an effective business is very important. If you want to do any business, it should be based on the current data and also the business, and also as well as a detail about the audience, services.
Jeff, you're dropping off. Your sound is dropping off. You have to speak directly to the microphone. You're breaking up, mate. Go ahead.
Is it better now?
That's much better. Yeah, that's better. Thank you.
Okay. Sorry, I apologize, everyone. I think my sound was breaking off. I will say that this is part of the recap of the business.
You're breaking up again, Jeff. They can't hear you.
Let me disable this.
Can you hear me?
Yeah, that's much better, Jeff. There, they can hear you loud and clear. Go with that. Thanks, everyone. Go ahead, Jeff.
I removed my earpiece. Sorry for that, because the earpiece sometimes got a little bit of problem. As I said, I think this is just part of the recap for those to bring you back from the business plan. Those who attended in the past couple of weeks, I believe you all have learned a little bit more about business plan, what's important about having a good business plan. Because I have done quite a fair bit of business plan involved in some startup company. I created some business plan for them. I created some what I call investor decks as well. And it's the first thing you must always have when you start a business, right? It's a great idea to have starting one, but you must have a roadmap. If you don't have a roadmap, when you face a problem, you don't know what's the scenario to move. All right, because you must have something, right? If, for example, let's say today, if you get out of the house and say, you just walk out of the house and say, hey, let's go, let's do something together. But if you don't know which direction to go, then you come to a junction, you just like, you become stuck. Should we go left? Should we turn right or left? Right? So it's important for you to start off with a business plan, right? So that is where I would say it's important on that one. Second, you must have a vision, right? This is something that I've been shared in the past, so I will run through it quickly before I come to my financial. So you have the vision and what's a mission and what's the objective of your doing. If you see one of the startup company, not too long ago, I was following up a lot of startup. They're being managed to raise a substantial amount of fund, and it was started by a lady in Indonesia. And her vision from the very beginning, unchanged. She just wants to make the fishermen have a better quality of life and better pricing. And today, they raised substantial amount of funding in Indonesia. Right? I think the company is called Akuna or something like that in Indonesia. Yeah, so those who are from Indonesia, you should know this is one of the startup company started by a 28-year-old person that helping a lot of fishermen to bring the product from rural area, bypass all the middlemen and sell to the overseas marketplace. So it created a marketplace for the fishermen. Yeah. So always have a vision, then you start with a mission. So you know your direction, or what we call the North Star, your compass, where you're heading. That is the first thing you need to start off with. Yeah. Then you work on your vision and your objective. Then you work on your strategy. That's where your long-term strategy would be and your short-term strategy, you know. Then from there, you go down to say, how do we going to approach all this strategy, right? Then what is a tactic, which is the tactical plan, right? Short-term, long-term, medium-term, how do you go about that? Yeah. And same thing as well. When you have the mission, vision, when you start the business, always look at your SWOT. I always ask people when I talk to some of the startup, because I review some startup for investing. So first thing is, what is your strength? Why your company in the first place, right? So a lot of them say, I got this mission. Yes, it's great, but you want to see which direction are they heading? What is your strength? Do they bring to the table their strength? That's the most important. Because for a company to be successful, either you have a skill or the experience, or you are creating something that is unique, right? Or something that you're very strong at, and whether your product is proven or not. That is one thing that we always look at when we invest or we review some so-called investor or startup company. A lot of startup, I would say, they're initially kind of keen to do a business, but they never look at what is their strength, because sometimes they have the core strength, and that is where they need to capitalize on, right? And from the core strength itself, they also need to be aware of their weakness, which are the area that they have their weaknesses, you know, and where they're vulnerable to, you know, what is a constraint. A lot of the time, the constraint come from the talent they have, maybe the skill set or the capital. Majority is a capital, right? You have a bunch of people, 2-3% come together, bring to the table programming skill, IT skill, marketing skill, which is great, but sometimes they lack of capital. So that is a weakness. Then you can see how do we overcome the weakness in the later stage, right? Then the other one is opportunity. Where is opportunity? Is that an unfilled gap in the market? Is that a big size of potential customer? Sometimes we always ask, you say, oh, is your opportunity, what is the market size? What is the addressable market size that you want to invest in, right? So we need to understand that as well. Yeah. And what is a margin, right? How do you revenue? Is it scalability? Whether you can scale or not? Because it's important. Any business that can grow, you must look at that, whether it can scale. It's something you can do by the constraint by your location, for example. It's fine, you still can make money, but you can only have limited growth because it's very hard to duplicate or very hard to scale. So because scalability of a business, yeah. Then you also look at the threat, which is like, what is the obstacle? Is there a competitor? Is it easy for people to coming in, a copycat, right? Because in every business, sometimes you have people who kind of, oh, that's easy, I can do it. Then you have competition, you create a lot idea that people coming out. But at the same time, sometimes regulatory and law also could be a restriction, because in certain country, you want to set up something, but there's a regulation restrict you. For example, let's say cryptocurrency, for example, you know crypto. You want to set up a crypto in your country, and maybe your regulation, the banking law does not allow you to do crypto. And in such a case, you can't do it. But it doesn't stop you to do other things like NFT, right? So I was in the NFT session earlier on, how to get into OpenSea, etc. So continue learning as part of what I'm going through. At the same time, as I say, the threat is real. You have to understand the SWOT analysis as you go along the way. Yeah. Okay. So critical ingredient on an effective business plan. I believe Benson has shared this whole step. I no need to go through in detail. So I'm just saying that today's session, I'm going to share very much on the bottom of that, which is the financial planning. Okay. Okay. Financial planning is for effective business, right? Is very critical, because as this slide, I take it from Wally itself. I like it because I think what he have as a 3 point here, which is saying that idea is great, but how you make them reality and sustain a business is critical. And creating a financial plan will give you opportunity to address your financial concern. And because you talk about money, you think about the startup cost, you think about financial projection and funding, and how do you pitch with the investor. And this is where today I'm going to talk about that very much. Yeah. So like I say, dollar and cents, right? For a startup, everything is involved cost. Nothing come free, right? No such thing as free lunch, as people always say. So it depends, how do you plan for it? How do you budget for it? And how do you use whatever available resources that you can do in order to fund your business? Because as you start a business, take example, some of us in the call today, I might not know you all, but I believe you all have a passion. That's why you're attending this call today, right? Because you want to learn something that can be taken away, and at the same time can help you to start your business, or you already started some business, you want to learn more, and that's where you can upskill yourself and take in some good point that is help you better planning your financial. Yeah. Okay. The other slide I took from Wally as well, which is say that business planning and crisis management are two different things, which is a great slide, I would say, because a lot of people who never plan for it, then many times when you fail to plan, you're going to be a firefighting as you come to the junction, as I say, because you don't have a roadmap. Yeah. Okay. Next one is an effective business plan. Roadmap, we know that we start from the bottom. You have a deep thinking, how you create your effective business plan. Once that is done, the next thing you think about is your revenue number, right? Because you need to know what is the revenue potentially you can generate it from the business. At the same time, you need to know about, let's say, how much can you scale, and how much do you need to generate revenue. And all possible scenario, I would say the best when you work on it is to understand what is the worst case scenario, right? What's the best case scenario, and what is the expected outcome. Then you can plan accordingly, right? Because in the financial plan, we always analyze in such a way that we want to make sure that in case your business grow one direction or the other, then you know how to overcome it. Then you know what capital do you have. So the next step in my slide, you can see that is your capital. How much capital do you have? What is the cash flow? And where do you need it? This is something that in a typical, let's say a startup, take example, if everyone of you start something, first thing you can always bootstrap. It's easy to bootstrap because you're kind of putting in some money from yourself, or you're borrowing some money from your relative, or your fathers, or your girlfriends, whoever. They will give you some funding, then at least that is something they can start off with. But you also need to know along the way, what happens if you run out of cash? right? Or along the way, if your business doesn't give you the revenue you want, what do you need to do? So that's where the scenario planning is very important. Yeah. In this session, I'm not going to complicate it because sometimes we do what I call analysis, a scenario analysis of what if the price adjusts, let's say by 10%, how much do we get the margin? If you adjust by 15%, how much is it? Right? So these are all financial planning in detail. But today's session, I would say we just keep it simple because I think all of us come from, some of you are from different background or different country. So we keep it basics and not too complicated, not into financial modeling, I would say. Yeah. Can I see a show of hand just to get your engaged? How many of you have started a business? Can I see a show of hand? Or running your own business now? Anyone who are running your own business? Just a show of hand. Anyone? Okay. Okay, good. Yeah. Okay. Yeah. If you run your business, you know that sometimes you need to plan, right? If you don't plan for it, you will fail. So you plan ahead. You make sure that you have your money that you actually help you to project where you're going to get the revenue from, right? So that's where after your revenue OPEX planning, I would say your cash flow, and that's the next thing. Then subsequently is your execution, a detailed roadmap. This is where you need to have a roadmap of success and don't afraid to keep changing, right? I invested in one of the startup company. I would say that initially the company was having a different business model. So I just to share experience here, right? Initially, they kind of come up with a simple business idea, which is great. So we managed to raise a total about, I would say, the valuation about 3 million plus. But then during the COVID time, actually the entire business model was at risk, right? So their business model doesn't work, but the team actually keep aligning. Then they came up with a different strategy, and they came up with a different way of doing business and different way of capturing data. So they ended up coming up with a 360 product. And out of that, because of everybody is using Zoom, then they cannot fly. So they kind of take a cold call approach, and they're going to knock on the door of all the different executive, different company in as far as Australia, as far as New Zealand, UK, and everything. And as you're aware, during the lockdown time, most of the company executive kind of get used to having a so-called Zoom meeting, right? So you don't mind, say, hey, somebody knock on my door and ask me for a Zoom meeting. Okay, fine, why not? Let's hear them up. And they go into a strategy that, okay, keep it simple and people are willing to try. And eventually, over a year plus, they have changed the entire business model completely. It ended up, they have about nearly 200 customers just after the COVID. And instead of running as a loss company from the beginning of 2 years, and now they're turning profitable since October last year. And now we are in the process of raising another round of funding again, a Series A funding, and the valuation has jumped up tremendously. So I would say that is one of the success story I've seen so far of my investment portfolio or the startup company. So that is where you can see that sometimes you do a business plan from the very beginning. Even how good is a plan, there's always a chance that the plan, as you go execution, there could be fine tuning that you need to do. Don't be afraid. Refit, redo, retry, refresh, and get it done again. There's no such thing as perfect business plan. If you have a plan, it's better than no plan, right? Along the way, if a customer change, market needs change, just like COVID. During the pandemic, you know that a lot of F&B just throw out the window, right? A lot of travel industry impacted. But the one that are doing the masks are doing very well. The one that are doing all the sanitizing, doing very well. The one that are doing cleaning, doing exceptionally well. So in every situation, you have to be what I call of the resilient is important. But second thing, you have to be understand the market needs and the demands that what is the current situation. If you can capture that moment, you'll be a success. And sometimes it doesn't take long. It only take you 2 years, pump, you strap up, immediately to capture certain thing that's new, and you'll be successful, right? So that is how execution and action. So as an entrepreneur, you have to be consistently always thinking about way of improving, thinking about way of changing, and how do you move on from one step to another. Yeah. Okay. Next one is the roadmap. Okay. So in every business plan, you also have your money roadmap, I would say. Right? As a money man, financial guy, I would say first thing you must know as from year one, where do you start? You start from your blueprint, you're going to test your design, you're going to run by your group. Then when you're going to launch your product, do you have enough money to do it? If not, when do you raise the funding, right? Do you have the, let's say, you might need, let's say, marketing. How much do you need? Maybe you need, let's say, 20,000 or 10,000 or 5,000, up to your plan accordingly. Because sometimes you can do a different way of raising funding, right? Some people doing a seed funding round, and you can get some few $1,000s in, 10,000, 20,000. Then subsequently, when your business generating some revenue, some tracking, you raise another pre-seed round. Then you go for the next step again, right? Then that's how you scale your business upward. Yeah. So today's topic, as I say, we are looking at financial, and let's move on. Okay. So I think I cover some of the area of this slide, which is say why financial planning, right? Because in an effective financial plan, you always need to know in detail dollar and cents, all right? Because that is where your bloodline is. And then you need to know what is your revenue growth. How do you grow your revenue? Today, maybe you can sell one item. Let's say you have a profit margin of 20%. Take as an example. And how many items do you need to sell to make that money out to pay for your bill? So that's something you need to calculate. Yeah. As I said by Wally at the end of the slide here presentation, we actually have created some template that you can take it with you, and you can actually use the template and put in your number, and you can run from there. Just check into what is your revenue number, how many units you need to sell. So something that you can already start off with. This is good, especially for those who don't have a financial background and you don't know how to do your so-called profit and loss, your budget, your forecast, your cash flow. So I created some template that you can actually use. Yeah. So your first thing, always focus on revenue. If your revenue is right, everything is okay. If your revenue model is wrong, whatever business plan you will not be able to grow. So first thing first is always top line. As a CFO guy, when we look at the P&L of a company, or we look at a company that we review or audit or due diligence, priority is always the revenue. Is the revenue is growing, trending up, or is the revenue is coming down, which is trending down? So we need to know what they are in, right? Some business you can see that it's not very sexy, not very interested. But when you look at the revenue, you'll be surprised. It's a simple model, but they generate a lot of money. So there is a lot of things that I can do, right? And today, if you look around you, anything you have on your table, anything around your house, somebody is making the money, correct? Right? The phone that you're using, somebody is making the money, right? So same thing, everything can make money, but just how do you manage the cost? How do you manage your growth? How do you get that into the customer, right? Even as I spoke to a friend who was saying that, no, even the chopstick or toothpick, which is a very simple thing that we use, we throw away, right? But the company keep on producing the toothpick. If they're not making money, they're not going to be producing it, correct? Right? So somebody is making money along the way. So the question is always like, wow, if there's an idea, why not me? Right? Why not I become one of those entrepreneurs and start off something? I know that we need have a own income. If you are still working, fine, but you can always side hustler. You can always start something on your own. Then slowly as you grow, eventually become bigger and bigger, then eventually you will have something. You can do online. If you're good at photography, you do a photography, but always look at revenue growth plan. What is your revenue from year one or month one? Then you start growing up. And how do you grow that revenue? Once you have the revenue growth plan, the next thing you look at is, what is the cost for me to get to my revenue target? right? If I want to have X amount of money, let's say 100,000 in a year, what is the cost to me, right? That's where you look at the detail. Do I need to pay somebody to help me? Do I need to hire somebody, right? Do I need to rent a place, or can I not rent a place? I use let's say a warehouse or some room to start off with. So keep the cost low, then you will start growing up from there. Very important. Everybody start out very low. If you all see in the internet, right? They always post the story of Jeff Bezos of the Amazon, how he started out with a one desk and a signboard Amazon, and that's how he started off his online business, and today become so successful, right? So everything starts with the seed, I always say, right? The seed to everything is always a seed. So when it comes to startup, we always say seed funding, because we fund the seed. If you don't know whether it grow or not growing, but eventually if one of those grow, it's going to be successful, it's going to be a big tree, then going to bear fruit, fine. If you don't, fine. You know, so that's something that you look at. Yeah. Then the next thing you look at is what is the resources needed when you grow your business, because this is basic thing that you have to be thinking about. If you run a business, you need to think about your revenue, your cost, what is the resources? Do you have the right talent? Okay. If you have the, for example, if you're a startup company with technical, you make sure that you have the technical skill set people. Then do you have the marketing? If you don't have marketing, how do you hire the marketing people? Because a lot of people lack is the marketing piece. Because marketing is important, because you can have a very great product, but if you cannot reach the customer, then your competitor can steal your idea and they come up with a very good strategy of marketing, you lose up to them, right? So you need to know, what do you have first? Your resources. Do you have the talent? You don't have the talent, where do you get the talent? Do you need to hire them? Right? Where do you store it? Where's the capital you have? Then the other one is a funding. How do you fund that? Do you do it as a loan, or do you do it as a seed, or is it a startup funding? Startup funding of the different way. In the past, you can always see a debenture or bond funding, but today we call it a safe funding. That is convertible, that trigger events that can actually trigger it off from the safe to become an equity. Then subsequently, of course, you go through the Series A funding, Series B, Series C funding, that eventually if you can cash out or M&A side, then everybody is happy with it. Yeah. Then in every business, same thing as well, you need to have your cash flow, right? Because if any plan you have, you don't have the cash flow, you don't know when your money is coming in, you don't know where your sales collection is coming in, you don't know where your liquidity is. If you let go of too much growth, but no money coming back, you can have a sales number that's very high, but if you don't have enough cash to pay for your staff, your salary, and your operating costs, then you get a problem, right? So this is where when you run a business, you make sure that you have that cash flow liquidity management in the next 3 years is possible as a start off. Then, but you track it closely every year or every 6 months. Yeah. Let me get a little bit of water first. Everybody follow so far? Okay, great. Thanks, Shadeen. Yeah, good. Okay, once you have of your so-called cash flow and liquidity in place, you come to key performance data. Okay, because you have the revenue and everything grow down, but then once you have all this information are in proper check, you always make sure that you have your key performance that investor are looking at. First of all, they're looking at is your gross profit margin. Is your product profitable enough margin or not? And they look at your EBITDA, or your earning before tax and depreciation, right? And then they look at the next one is a CAGR, which is a compound annual growth rate. It's supposed to say R. I think that is not a C. So you need to have your so-called, what is a growth? If your company is growing, let's say is 20-30% every year compounded, imagine it's going to be tremendous growth opportunity. So people are looking at all this as a key performance data. Yeah. And that is when you have this data, information, tracking, then what is your future fundraising planning? Yeah. Investor looking at ROI. If I put in 100,000 today, or put in, let's say, 10x, how much do I get up in the next 5 years? Example, if I put 100,000, you're going to give me a return of 10 times, I'm going to get out 10 million. or $1 million. Of course, I'm interested in the investment between, let's say, 3 years, right? But if I put in a investment, I'm not going to get my return only, let's say, 2-3% every year. Then that's not interesting, because there's a risk, and people will say, oh, by say I'll put this money into what I call into the stock market or into the bank, I get a better return. So this is why a financial planning is important, because that will actually give you a thought process that what you need to plan if you want to have a successful fundraising or successful business that you can eventually either raise funding or can generate enough money for yourself, or you can sell it off, right? So this is where you need to have. Okay, and let's move on to the next one, which is the key information that minimum you should have in your financial plan. First of all, you need to have is your profit and loss statement, right? So because this is the basic thing, as I say, the top line is your revenue, and then with the revenue, how much do you have in terms of your operating expenses, right? And what is that? So these people always look at, can I look at your P&L, right? Commonly it's always been called the P&L, if those who know, or sometimes they call it income statement, right? Then from the income statement, you can see what is your performance index, your gross profit margin, or sometimes we call it net profit before tax, or sometimes we call it EBITDA, right? And then you have your balance sheet of your asset and liability. Balance sheet is like your, what I call, is your like your health of your company. One is your profitability of your company, your revenue. Balance sheet is your health of your company, which is to show that how much capital you have, how much liability do you have. Some company have a growth, but when they come to the balance sheet, you can see that they're actually being funded tremendously by loan. And if the loan that's got interest to pay, then it means that if the business coming down, right, they get caught in the situation that they're unable to pay back the loan, and there's an interest payment that is going to be impact them. Yeah. And the next one is the free cash flow analysis. This is where you analyze at the business model. Today, let's say you generate X amount of money, let's say 100,000. After you less up all your expenses, you pay off all your salary, you pay off all your rental, and you pay off all the other costs that you have. How much is the net cash that you left? Because this is the actual money, and the net cash doesn't lie, right? Number doesn't lie. Same. But if you don't have the net cash, it's a negative cash flow, for example, then it means you always continue to put money into your business. And that is not healthy, right? Because if your business is growing, you make sure that you also generate money, that you're going to build up your reserve, and that help your business to reinvest again. Because if you don't have the money, you cannot hire people. If the market coming down, you want to buy another business, you don't have the money to buy it because you don't have the cash flow. So free cash flow is something that we're always looking at as well, because you know a business, how much do they generate, and if their so-called revenue growth is great, fine. If you make a profit, perfect. If the key performance index coming, gross margin is high, net profit still got 20-15%, the balance sheet health is healthy, and they generate profit cash flow. This is a business that a lot of people want, and people want to invest in it, because free cash flow, just like you rest out everything, I still got the money there. Then every year or every month, if you do a free cash flow analysis on the monthly basis, then you know I can always get the money out from the business. That will help me to build up my reserve, to help me to strengthen my company balance sheet, and to help me to invest again for the growth, right? And the last one is, how do you apply all this fund for the usage? Because when people look at the business, is whatever cash flow you generated, how do you use it, right? Either you pay for investment, hiring more marketing people, right? If your company growing, for example, let's say today you start off from, let's say in Namibia or Sri Lanka, right? And your business is growing. The next stage you think about, how do I reach out to other customer in other market, right? For example, let's say in Singapore, take example. Most of the Singapore company, they would like to grow up from the Singapore, because Singapore population only 5 million, very small, right? If I can sell to anyone, it's already 5 million. But if I can move to Vietnam, I got 100 million population. Almost to Indonesia, there's 200 million population. Just imagine the market size. Its addressable market is so huge, right? So you must have that thought and say, if I move this business to so successful in one country, can I scale it up? If yes, next step is expand to the overseas country. How do I go about that? Yeah. So this is all key information. As I said, my presentation is I share some experience and give you all a little background of financial planning. Along the way, I would drift a bit sharing about more about business as well, so that you can take note, and hopefully that sharing would actually help people to inspire you all to be a successful entrepreneur and successful running your business. Yeah. Okay. Let's move on to one of the key accounts. I think it's a profit and loss. Yeah. So for those who have done business, you know the profit and loss is your starting point, your revenue. So I'll create something here, which you can see that from here. And the basic, you must have your revenue. If you're doing a sales, of course, the sales are good. If you're doing services, for example, if you're providing services or laundry services, caregiving services, or you're supporting services or delivery services, then your service income. But if you are an artist or someone who are engineer, if you create some product that people can buy, but you can license, for example, IT, right? Most of the IT is called software. So you have the licensing fee. So this is your revenue, right? And it can be a combination. It not necessarily have to be in just from sales or services, but some company they sell hardware, for example, let's say a trading company or service provider company. They sell some hardware, so they come from sales are good, but they're providing maintenance services, right? They have a services revenue as well because it's sales are good, then they do it every year serving, right? Yeah. Then if they also do licensing, for example, people take the license to broadcast and everything, then they got licensing income. So in the business, you want to have multiple stream of income if possible, right? Best if you can do consulting services, you can do sales of good, you can do maintenance and that actually help you to build a way. And the trend right now is people try to build what they call subscription SaaS, subscription as a services, right? Right. Today, if you look at Netflix, to take example, or you subscribe for Disney Plus, right? You pay only, let's say, $9, $10 per month. But this is called subscription model, and that grow because it's very stick. You don't see the money going up, but you actually generate a lot of revenue. And subscription money business is very stick because people tend to renew. And today, you know, let's say you have a base of 100,000. Next year, you're going to be at least 100,000 going to give you a revenue. Each of them multiplied by the unit fee, right? 100,000 user. Each of them give you $10. You're going to be $1 million already, right? Then you add in more, acquire more customer, you grow again. Add in more customer, grow again. So after 5 years, your customer base become very big. So when you have a big customer base, your whole business have a higher valuation because this is a cash that is going to be generated. So that's what called the revenue, right? The second one is is the cost of goods sold. So it's for you to get your top line revenue. How do you deliver that? Right? To deliver that, maybe you need to buy the good from supplier, right? If for the good is the services, is your cost of the people that is actually rendering your services, or your consulting, maybe you hire external consulting, that is your cost, and your licensing would be, you know, your what's your software cost that you actually produce the software. Yeah. So when you less out your top line revenue and your cost of goods sold, you get a gross profit margin. So this is the first indicator of what is your business. Most of the business will have a very good, healthy gross profit margin. Take a guess. I used to work Microsoft for 4 years. When you look at the number, I also do audit with a different company. Most of the company gross profit margin, I would say, fall in the range of about 50-60% GP margin. In Microsoft, well, take a guess. Anybody know how much is the percentage? Gross profit margin? They're doing licensing, right? Microsoft, 90%. So that's why they are very profitable, 90+%. Okay, and Microsoft, the operating expenses is only 10% maximum we can spend. So imagine net of that, they're gonna get about 70 plus to 80% of whatever revenue they generated every year. So if those are investor, it's a good share to buy. Okay. Yeah. Okay. So gross profit margin, first thing is you have to have a very healthy profit margin because it's going to cushion for you to pay for your expenses, right? So the next one is the operating expenses. This is where you have in the P&L your people cost. I'll break down into a simple way. Normally we say majority of your costs will go to your people cost, your salary, your bonus, your allowances, and so the social insurance that you need to pay for the people. And this can make up bulk of your whole operating expenses, right? So we always track to make sure that the people costs are manageable and under control, because most of the business, other than the cost of goods sold, the second biggest cost is always the people cost. It can take up 30 to 40% of your whole operating expenses, right? Because you pay the people, you pay the founders, everything. Yeah. Then the next one that actually generates the revenue is your sales and marketing expenses. Yeah. You want to make sure you have the right campaign, you have the right advertising, lead generations, right? Do you have the social medias, advertising? Do you have the ongoing promotion, right? Then this is where your sales, and this is the cost that we normally don't cut down. We always want to grow that, because every dollar you spend on your marketing will actually might be able to give you the revenue return that you want. So sometimes what we do is we actually track the marketing spend versus how much revenue we can generate. Then if we think that is profitable, we invest more. If we think that's not profitable, we will cut down certain campaigns. So as a financial controller, we always make sure that these top two items are always in check: people cost, marketing expenses. And if I need to cut some people, I will cut those people. I will reduce I will put the money into the sales and marketing, because it generates the top line, right? If the business is coming down, you can hear that, like yesterday, new Tesla just sent out an email and saying that they will cut the staff by 10% globally. So you know that why? Because it's the first thing they can cut, and it's the first thing that is easy. They give a notice, the cost immediately down, and they save 10% profit, right? And it's a huge, when you have a huge workforce, right? But then marketing, they never hold back, because it's a way to grow the revenue. So every financial controller or CFO, we always look at the data, because to us it's important to know key performance on the data and what is driving the business. And when we know what driving the business, we know what to do when things go wrong, or when things go right, what we do we invest in, right? So that is where we balance off between the so-called operating expenses, right? It's just like a bucket. You give me, let's say, a bucket of money here, let's say $1 million to manage. How do I spend my money to give me $10 million of return, right? So that is where you manage it properly, right? If you can get 10 times, 10x, wow, that's great investment. But if you cannot, can you get 7x in the tough time, or 5x, right? Anything below that will be tough to manage, right? So this is where a CFO guy would always try to manage the expenses through the people cost management and to the sales and marketing, right? For the people cost, sometimes what we do is, let's say, take example, instead of we want to hire somebody, we'll prioritize and say, okay, let's hire marketing people first, because our business are down. We need somebody to run the campaign. We hire the marketing first. Maybe the operating people, maintaining people, we can hire later on, 2 months later. So we save 2 months cost to pay for operating expenses for marketing. So this is some strategy as a financial controller sometimes we use. Yeah. Okay. The next one is the operating cost, which is the rental, maintenance. These are fixed costs, no choice. You need to have a warehouse, you need to have the logistics to deliver your good, you need to have the maintenance, your rentals, or your premises. Is operating expenses. Yeah. Then next one is a finance cost. It's interest on borrowing. If you borrow money, you need to pay back, because they call it the capital funding. It's a capital expense. You need to put it in, no choice, right? Then you get the net profit before tax. Yeah. So this is the basic layout of how the P&L look like. Then it would be good for you to track. This is one of the slides that we track in terms of profit and loss. You can see that now. Normally we'll track and say, okay, January, February, how much is my profit generated, revenue, how much is my profit. So you need to have some data like this. That will give you a good start of a help. So sometimes your profit can be go down negative in the chart, then easy. For me, even though I use Excel, but I always prefer what they call data visualization. So I do analytic, I do a Power BI, Tableau, because that is where is not everyone are financial literacy, but it would be good for someone who can look at the graph, right? Every one of you can understand the graph and say, oh, that's going up, that's coming down in March, the revenue, and then going up again in June, that's coming down again. So it's easy to look at the graph. This is where the trend is moving. As a finance people, we go into data visualization, analytic, right? It's easy to understand. Anyone can tell you, oh, it's going up in June, and the profit is also going down, but in November it's coming down. Then it's a management. Sometimes you can say, oh, can we do some campaign in that slow month? How do we increase that, right? To make sure that we can always have that June return every month. But in order to do that, say why there's a slowdown in maybe let's say February or March, maybe because there's a festival season, there's a Chinese New Year, or there's a Tet celebration in Vietnam, then you can see from there. So it's easy to digest. So this is something that information that is very powerful, right? That can help the business. Yeah. Then in the financial model as well, you should have, this is another set of financial table. You should have a comparative figure, because one set of data itself doesn't tell you a story. You can always have at least 2 or 3 years if you have history of the business, because that will actually give you and say, oh, how many customers do I have? How many revenue do I generated? What is my average price per sales? Right? Is it growing, trending? For example, in this template here, I can see that the average price per sales is year 1, I sell $75. Year 2, I sell 80, 90. So I'm growing my business. My sales revenue start from 500,000, become 4 million, then I jump to 16 million. So this is a tremendous growth, right? Then what is my revenue margin, right? What's my expenses, right? So it will give you a good indicator. But as I said, financial data, one set by itself, can only tell you the health of the year. But when you have put 2 or 3 years together, it tells you a story. So in most company, you want to have a story to sell, right? Because eventually when you sell the business or you raise funding, everything, you need to have a story and say, how much do I grow my business? How much do I spend on my marketing? How much do I have my customer base having growing so fast? And this is all about projecting and preparation of your financial, that you can give you the head up when it comes to the right time. People want to buy your business, then you can see your numbers all over the place. Then people will say, oh, sorry, I don't know. And as a business entrepreneur, business owner, you want to be on top of your business. You want to know what is happening in your business. Are you growing? Are you not growing? Or are you coming down? If you're coming down, what do you need to do? You're growing, do you invest more in your people? So this is all about visibility of your business, and you know exactly how your business is direction that you're heading, and do you on track on your business plan, right? From the beginning, we talk about the business plan, right? So then you can always use the number here, dollar and cent, cross-check against your initial business plan. If your business plan doesn't link, or is your grow faster, that means your business plan are too low. So then you project again and you grow again. But if you think that, oh, you want to grow 3 million, for example, right? Then you can say, okay, if my target, let's say, is 20 million in year 3, oh, only hit 16 million. I'm not on track. Then you know what you need to do. So that is give you a business plan, which is a direction. But at the same time, your financial information is your actual data that reality put you back on situation. Then you will know, oh, how much did I have performed? How much have I grown? What do I need to be there? Or if I over exceed my business plan, my business plan is not grow fast enough, I need to be more aggressive. I can grow faster, then you can rethink again, refine again. Yeah. So you need to have that. So as I say, data is only useful when you are comparative. Same thing, this is something that as you go along the way, once you got your old data, the next thing you need to look at is your forecast. Right? How do you forecast your revenue growth? Let's say, take example in this sample here, the metric here. You can see that a startup company, maybe you have your 2020, you only have 10 clients, you only have 80 order coming in, you got so much revenue. Then this is key data, right? Then second year, maybe you grow by 100%, from 10 customer become 20 customer, your order increased by 80 to 200, your revenue would jump up, but your net revenue will jump up as well, right? But then you say, okay, if I'm going to continue this growth in this year, how much am I going to get? Maybe another 10 more customer. Following year, maybe I get another 20 more customer. Then you have that. So this is called financial projection. Yeah. And this is where most of the business owner, you need to think about this and you need to plan ahead. And that is where your P&L as a starting point will give you that current year performance. Then you do compare the current year performance with the previous year performance and the following year performance. And the next step is talking about last 2-3 years performance versus my future growth plan for the next 2 years. And that would give you a good sense of direction where you are heading. Yeah, because it's important for you to know where the business is heading, right? Because if you're just like you're driving a car, right? If you're driving a car, you know how far you go. You can look at your meter, right? Then you must see the which direction are you heading. Are you over or not, right? Then at the same time you can say, okay, I already reached halfway through my projection. The next year and the following year, I know where I'm heading to. Same thing as well. Like you go to drive a car, you go to one stop, one place, one location. Then you know, oh, my next destination is where. Now, how long do I take to go there? What do I need to go there? Then the next one is, okay, from there, the following destination, where do I go? So it's a journey. So in business, same thing as well. It's a journey that you grow from the business itself. Yeah. Okay, so we cover the basic on profit and loss statement. Anybody got any issue, any question before we proceed with the budget and forecast? Okay. Sorry, let me see the tab. I can't see the message. Just open up a bit. See more people. Okay, maybe we cover as we go. Then save the question answer at the end of it. So at least when they come to the end of that, we can have any question and answer. Would that be good? So at least we're on track on our time. Yeah. Okay. Okay. The next one is the budget, forecasting and budget. Yeah. Okay. Why we need to forecast and the best what I call and budget for it? Because if in the business itself, our space, you can see on the top there, I say, if you fail to plan, you plan to fail. All right. Because in business it's straightforward, because competitor is there and everybody try to come in to take a market share. And if you don't plan properly, you don't budget properly, you run out of cash, you don't forecast your growth, you will not be there. Right? So budgeting is the two things different between budgeting and forecasting. Budgeting is to tell you how you want to use your money allocated for current year. If let's say today you plan, I say I want to spend 100,000, right? How much do I go to salary? How much do I go to pay for marketing? Do I pay for the rent? How much do I pay for my my other expenses and etc.? So you know this is called budgeting, and budgeting is used for 1 year. Whereby forecasting is what is my next 2 years revenue look like, and what is my expenses look like. So in most CFO or situations, I would say at the end of the year, we always forecast what is the budget for next year. And sometimes we forecast for the next 2 to 3 years. So if you are someone who are in the startup business, doing something, you need to forecast at least 2-3 years, because they actually give you a cash flow situation. But your budget must be a budget for, let's say, current year or next year budget, because you know how much you need now, right? That is where the difference between the two. Yeah. So budgeting is to spend what you have current year in the bucket, and forecasting is about the next 2 years or the next following years or the years later, the future year. Yeah, one is current year, one is a future year. And comparative data, will be useful because it gives you a meaningful comparison of up and down your business. And when you come to forecast, it would be good to always have best practice is to have a 3-year plan. Always have your running 3-year plan, because that will actually give you the compass or direction of your business. Where are you heading always, right? So you always can fine tune along the way. Maybe the following 2 years might not be 100% accurate, but your next year should be quite close to your current year, and your current year should be quite close to your previous year, right? Because let's say your previous year, you grow your business. Take example, let's say you have a 50,000 customer, and each customer going to give you, let's say, $10 of revenue. Then you know exactly how much you already get, $500,000, right? You know, then if you're going to grow that by 12, increase your price by another $1, maybe some customer might drop off, they're not sure. But if you can continue growing another customer by another 5,000, then your business will grow tremendously. Yeah. So that is how you look at the thing. Yeah. Okay, everybody good? Give me a thumb up. Is everybody good? Okay, clear? Great. Thank you. Thank you. Yeah. Okay, that's helpful. Yeah. Okay. Budget, as I said, you might have to forecast you cover 3 years. Then you'll try covering real and foreseeable expenses. All right. What I mean by real and foreseeable expenses? Let's say today your business have paying rental, etc. And tomorrow you think that you want to grow to another city. For example, let's say you're currently in one part of the city, your business. But if you want to open up 3 more outlets, right, in 3 more cities, then you have to build in this. What do you think the cost would be in the city? Today you're in the city, let's say ABC. Let's say, take example, let's say I'm familiar with Vietnam. Let's say if I'm in Ho Chi Minh City, right? So if I'm going to have a store in Ho Chi Minh City, let's say in Nguyen Hue Street, then the next day, if I want to open up another one in Dong Hoi Street, then I would have to budget for it, right? Then if the following year, if I want to go to Hanoi or go to Da Nang, then I need to know how much is my rental there, who are going to hire there, because you're going to duplicate the cost again, right? Because that is where you look at that. Then if you want to deliver your product, let's say to the Mekong Delta or to the another area out of the town, then you need to build in what is the logistic cost, right? So this is something that you need to plan for it. Yeah. So that's called covering the real and foreseeable future. And you also have to head up on terms of the fund usage. And sometimes when you plan the business, you can see from the forecast, oh, next year I will have short of money, right? Then you think, how do I raise funding? How do I get the money to pay for it? Yeah. Yes. I see somebody raise hand. Okay. Yeah. I think Maria and Cheryl is raising a hand, right? Okay. Can we keep the question to the end, then we can answer from there, because I can't see my chart here. Yeah. Okay, great. Thanks, Maria. Okay, thanks, Cheryl. Okay. I will keep some about 15-20 minutes at the end of the session, so we can have question answer. I know that some of you will have some question answer. That would be great. Then when Amara open up the what I call the mute for everyone, then you all can chat from there. Okay. Yeah. Okay. So I have a sample template here. This is a sample P&L or forecast that you can use. As I said, I created this one with a template that at the end of the session, when Wally share with you all, you can take it and just change the number. Then you can work from there. In the sample template, I can say that this is a simple formula, but of course you can add in. I believe this cover majority of about 80 to 90% of a normal business expenses you run through. So you can actually use a template and just change your revenue number that you want to put in. Then what is your cost of goods sold, right? And then you can other people costs, then the marketing expenses, general admins, and the financial expenses. This cover, as I said, about 60-70% of the costs that relevant for you to run a business. Yeah. And why I highlight 2 things here, the gross profit and the net profit, that this is your key performance. You need to always know where is your gross profit, right? If I buy a goods for $10, if I sell for $25, I got a $15 profit, right? My $15 profit is my gross profit margin. And that $15 will pay for all my other expenses, which is called the OPEX, in short, operating expenses, right? So in this template model, just a simple one, you can see that you have the people cost, which is take out your salary, bonus, allowance. You got social insurance contribution, right? In Singapore here it's because CPF. Maybe in your country it's called differently, right? Like Malaysia is called EPF. Then the SOCSO, right? Social insurance here. Then the marketing expenses, you know that you have advertising and promotion to grow your business. Normally you have budgeted certain X amount. You don't want to overspend, but you also want to make sure that it's continue to generate the top revenue number on the top. Then your social media, your branding, marketing. Then if you have a salespeople actually going out to meet the customer, then you have your business entertainment and traveling expenses, right? So this actually gives you a sense of what you need to do in order to generate the revenue. You have the general admin expenses, right? This is where like your rent of the premises, your equipment, if you're renting equipment, right? Then you have your security and maintenance. Then don't forget IT communication costs, because in today's world, without IT and communication, we wouldn't be talking to each other right now, right? So you need to pay for your Wi-Fi, you need to pay for your phone and your IT support, your PC, your laptop, or your phone, wherever you are using it. So it's a mobility cost that today is a necessity, right? Then don't forget you also have professional services, because when you run a business, you need to file tax return. Are you good at bookkeeping? If you're not at bookkeeping, you hire somebody to help you bookkeeping, then you need the accountant cost as well, right? Then you get the audit, because some country, the compliance of the business is quite complicated, right? Like Vietnam, for example, you need to file the VAT tax. Singapore, we call it the GST. Then if you're not expert in that, sometimes you hire somebody or you outsource it to somebody, so there's a cost to you, right? So if you are incorporated as a private limited company, normally you require to do a tax filing, and you also require to have a corporate secretary. If you do that, you have a certain cost that you have to incur. So normally this is about, I don't know, this is Singapore estimate about $4,000 to $5,000 at least for a normal business, because of the compliance cost. And you don't want to break the law of failure to file a return, because the moment you fail to file some return, then you're going to get yourself into trouble. All right. So you don't want to get into the situation like that. Yeah. So I would say when you start business, get it right from the very beginning, get the compliance in place, get everything in place, then you have a peace of mind. Because I've seen some businesses, people kind of run. Yes, it's good. When you're entrepreneur, you start up is fine. But when you start growing, then people say, can I have your financial statement? Or not ready? Can I have your tax return? I'm not ready. Then if you're running business for 3 to 5 years, you don't have all this basic information in place. It's very hard for people to put in money in your business, because they don't know what they're stepping in. All right, because there could be a lot of risk if you don't file properly. Investor coming in, then subsequently investor get caught because of situation whereby therefore you never file your return. Yeah. Then if you take a license fee yourself, franchise license fee, annual fee. If you run a business through a franchisee, you have to pay a franchise fee. But if you are using a software, for example, right, Microsoft software, you make sure that you also pay the license fee. If you use, let's say, Adobe, and you use anything for your designing work, you need to pay a license fee. You have to pay a license fee, because sometimes license fee could be quite substantial, especially like franchise. But if you don't pay, your business will get impacted. Yeah. And in the past, a lot of what I call people are kind of fake copy, of a license and everything. But today is good with the SaaS model, and the subscription basis is very hard. Right? Like today, Microsoft, you're using the so-called PowerPoint presentation, Microsoft Office 365. If you don't pay the fee annually, they give you a notice. Second time, when they give you a notice, you don't pay, they just shut you down and you can't use it anymore. Yeah, so there's a model that moving into or legalizing of all the license. But you don't need to worry about maintenance. You don't need to worry about upkeep and update, right? So if you use a phone regularly, take example, let's say you're using an Apple phone or Samsung phone, there's always a software update, because they always patch, and this is where the licensing fee is. Yeah. Okay. Next one, I think, is a finance operating expenses. So top of finance expenses is always the interest on your borrowing, right? Because this is going to take up quite a fair bit. So you have to be always mindful of how much interest of borrowing a loan. And this is one of the key information that people are looking at when they come to investment, because they want to see how much are you paying on these financial charges, right, to the loan and borrowing? You could be growing the business, but if you borrow a lot of money, then this is going to be a very huge amount that you need to pay up to continue your business. Yeah. So the next one is the depreciation, equipment, furniture and fitting. We call it fixed asset. So normally, for example, let's say you buy, take example, let's say you spend on your office, right? You buy some table, desk and everything, and it costs you all at in, let's say it's $5,000. You don't charge $5,000 into your books at one time, because the good actually, the asset actually have so-called useful life. So take example, let's say your table and chair, you think that's going to be depreciated over 3 years. Then you apportion it over 3 years. Year one, how much? Let's say it's a $3,000, for example. First year, you're going to charge 1,000. Then second year, you still use the same furniture and fitting, table and everything. Next year, you charge another 1,000. Third year, you charge another 1,000. So this is called depreciation for those who are not from financial accounting background. That's why we call it, we amortize it over a period of 3 years. Right? So that is always a set of rules when it comes to depreciation. You can't simply plug the number because there's a certain accounting gap, acceptable practice, or certain IFRS, we call it the International Financial Reporting Standard, that you have to follow. Your accountants or your finance people should know, because that is where you can see what type of equipment you're in. If you're buying a motor vehicle, you can use for 10 years, then they're spread over 10 years. If your furniture and fitting maybe over 3 years, then they will divide it by 3 years. But if, let's say, for example, certain asset, let's say computer, maybe only 2 years or 3 years maximum nowadays, your computer have to change already. So normally they would kind of expand this off or something. So there's a policy, accounting policy. So you need to follow that. Yeah. Okay. Then the next one is your annual event. Maybe sometimes you'll have your annual party and celebration, because some company, right? Because you have salespeople, normally you need to motivate them. And most of the salespeople always expect certain overseas trip, you know, or for reward and everything. Then that's where you have some expenses that you need to put it in as well. Yeah. Then on top, then the balance would be miscellaneous expenses, like you have what I call refresher in the office, buy some coffee for everyone to drinks, everything. So that's called miscellaneous expenses. So when you add all this up, it's going to give you the operating expenses. On the top here, you can see, right? So when you less up your gross profit with your operating expenses, it gives you the net profit before tax. Right? In this sample here, you can see that the profit dropped from 70%, become only about 14% of the turnover. Because why? Because you got expenses, operating expenses that you have to be accounted for, right? So in this sample here, right, the majority of the cost actually going to the people cost. You can see that there's about, out of 130 over 1,000, about 68,000 actually go through the people cost. So as I say, mostly people cost is the highest in the business operation. Yeah. So rental costs are fixed and everything, but the people is where you need to generate the sales. Yeah. Then corporate tax depend on your country. So this is just an estimate using a sample of about 17%, which is for Singapore. And that will actually give you a net profit with after tax of about 30,000. So that you can create the net profit still about 12%. Yeah. So this is just a sample. This template is available at the end of it. I think Wally will share with you all. It's inside the whole template that I created. Yeah. Next one is a financial budget and forecast. Okay. So when you do, this is one for 1 year, right, in your forecast template. But when you start doing your financial budget and forecast, you need to have something that gives you a visibility about what you have done in the past and where you are now and where you are going. Right? I repeat again. So you need to know what is in the past, what you are doing. Right? For example, in this one is FY 2021 and FY 2022, what you're doing now. And 23, 24, 25 is your future. Right? So they will actually give you a sense of how your revenue will grow. Right? And what is the service and maintenance, right? All the other expenses projecting. So you can see where you're heading. Take example, the next 2-3 years, mostly you can very close forecast between your current year and the following year. The next 2 years just a sense of direction where you might likely to land if you go on this growth rate, right? Because for example, in the current growth rate, you know that, okay, if I'm going to grow, my revenue is going to grow at 10% every year, I'm going to grow on this method, right? But this is where you can see the business direction. It will give you a sense, yeah? So as a business owner, it's always good that you always have to know your compass. Because if you don't know your compass, you don't know where you're heading. And this will actually give you an indicative. And money, dollar and cent doesn't lie, because it actually gives you a good sense whether you have the money or don't have the money to run. Right? Yeah, your business could be look very healthy, but you don't have the money. You still have to think about, what do I need to get that money in to help my business to grow the next stage. Yeah. Then this is where a simple of financial budget and forecast look like. Okay, and I think this template is also available in the template that I prepared, and we'll share later on at the end of the course. So this actually also have some formula here. It gives you, let's say, for example, here you can see that my revenue is growing at this rate, right? And how much is my GP margin, etc. So this is just a stat template. You can always change around the number, play around with it. Yeah. Okay. Next one, as I say, I always like to use graph, because I think graph will give you a good sense of when you're talking to anyone, including when you're talking to a simple layman that does not have financial knowledge. A graph like this can tell you exactly the story of how you grow, and they also tell you exactly, you know, are you making a profit or loss. So in this, for example, this one I can say, oh, first you are making a loss, this one I'm making a loss, right? Then I'm expected to make some profit here. My profit going to grow higher and higher up. So this is just a financial forecast projection. So if you can always incorporate a graph, because a graph will give you a good sense of direction, where your business are heading, where you are going up or going down. Huh? So this is talking about P&L. Yeah. So as I said, you always have to have your past history, current, and your future forecast next year, and you have the following 2-year forecast if you can. That will give you a good sense of your business, where you grow. This might be just a what I call aggressive forecast, but if you can say, okay, I grow from here to here and 100% here, I expected to go and 100% here. In order to do that, what resources do I need? Then you start planning. All right. Then when you look at this type of graph, investor were very keen, because I said, wow, you actually come from 1.3 million, 1.7, the following year, you're not growing. This year, you're growing very fast. This year, you're doubling up your revenue again the following year. Then next year, you're going to doubling up again. Then you mean I expected this is a healthy business, right? You look at the graph, everyone look at this graph, you feel this is a healthy business. And then the next stage is, what do I value the company, right? Am I going to pay, how much am I going to pay for this type of growth? Yeah. So as a business owner, you can have a good what I call a P&L to share with people. Yeah. Okay. The next one is this one. So this is something I created for informative purposes. You can see that you can have a 5-year compound growth rate. So this is from the chart here, right? So when you translate that into the growth, you can see, oh, I have this, which is my growth rate. So I can see 200% growth from there, from my costs and then total revenue. So this is just a chart for illustrative purpose, right? Because infographic is something that the trend that's moving into, and people are using infographic as a visualization for you to see where you break down all your expenses, where you break down the growth and everything. Then you can see how fast is your business growing compared to others. Yeah. Okay, hope you're all following so far. Okay, good. Okay, thumbs up. Everybody following? Nobody fall asleep? Yeah, okay. Yeah, Henry, yes, okay. We go in. Okay, good. Sangkao, Aban, yep. Okay, great. And Niang, is it Zo Niang, is it from Myanmar, I believe? All right, okay, good. Good. Tashi, okay. Yeah, great. Mark, Kelvin. I see a lot of people. Okay, great. Okay, let's move on. Balance sheet. As I say, balance sheet is a help about a company. Right? Let me drink water. So, balance sheet from the very beginning, I say, why balance sheet? What is balance sheet? It's a statement of your asset and the liability of the company, right? It's like just like your net worth, right? Today, if you're growing, but then say, okay, how much do you have left after you take out all the liability? So this is what they're talking about, statement, asset, liability. Normally, it is stated at a point in time. For example, let's say year end, if your year end is 31st December, but not necessarily always 31st December, because some company would use, let's say 30th of June, or some people would prefer to use, let's say 31st of March. Normally, it's always on a quarter because it's easy to calculate. Either I have my March year end, or I have my June year end, or I have my September year end. But commonly, most of the company would actually have 31st December as a year end, right? Because it's easy to follow the calendar year. But some company don't like that one. Why? Because of year end. If your year end is on 31st December, if you ask the auditor to do the audit, normally it's more expensive because there are short of people, everybody year end at the same time, right? So sometimes because of when you start the business, let's say you start the business in June, I prefer my next year going to be June, so I've got a 12-month account, right? So that's one of the ways some people have a different year end for many reasons. For example, like Microsoft year end is on the 30th of June. So every time it's a June, it's a year end. So when it comes to the Christmas at the end of the year, we're still working because they're still closing the quarter. It's called second quarter. So each company have a different year end. Yeah. Okay. It is, as I say, balance sheet is actually give auditor and the shareholder a sense of the health of the company. It gives you a sense of where you are currently at this point in time. Are you healthy? Are you not healthy? Just like a health check of a company. It gives you a say that, okay, at this point in time, after I make so much money, I put in so much money, then I less all my borrowing, how much do I owe to other people? How much do I left? Right? So this is called the scorecard of your net asset value after deducting all borrowing, loan, and liability. Right? But when you see a negative net book value, it means not good because the company is going to have a going concern. It means you have more borrowing, then you have the asset. That means your company can be collapsed any point in time. Yeah. So it means you need additional funding to pay for the bill in the following period. Then you start the planning about financial. How do you get the finance? How do you get the money coming in? And also balance sheet is a baseline for valuation. In the case of a liquidation, let's say it's a company want to close down today, and this is what you're going to get out of that, because you have to pay out all the people first, all the people that own the tax authority, the borrowing from the bank, borrowing from friends, borrowing from the creditor, everything. So you have to settle everything before you can exit. So that's called the basis of a valuation in the liquidation, and it could be the baseline, the minimum of M&A. Anybody know M&A, right? It's called merger and acquisition. So in the merger acquisition, sometimes people looking at it say, oh, how much is the company worth if the company is going to close down, and what is the asset left, right? If the car I can still sell, the building I can still sell it, how much do I get out from there, right? So this is like the baseline of valuation. So this is very important for you to know your health, because it is know exactly is the company are doing very well or not. Yeah. But revenue is still number one. As I say, once your revenue top line is good, healthy, the rest of the thing can be solved. No key issue. Right? Okay. So a sample of a balance sheet template is look like this. You will have an asset on one hand. You can see here. You have the cash, current asset. You have the trade account receivable. This is some money that people owe you. And you have the inventory. Inventory means your stock that you have in place right now. Okay. So sometimes we track beginning balance and the end balance, so you know where's a movement. Then you have this is a total, we call it current asset, how much you have in the currently. Then you have non-current asset. In the past, we call this fixed asset, but now sometimes you call it non-current asset. Fixed asset means the thing that's going to be used for more than a year. Everything that is current, it means less than a year, less than 12 months. Yeah. So non-current asset can be like, non-movable, like your property, your plant, your equipment. If you are a factory, you have the factory, machinery and everything. So that fall under property, plant and equipment, PPE. Right? It's commonly known as. So it depends how much you have down there. Then your intangible asset, this could be some licensing fee that you paid and everything, or loyalty fee you paid. Then the equity investment is how much you're invested in that one, no? As you took out some share in the company, etc. You have to get up together. Your current asset plus your non-current asset or your fixed asset will give you a total asset. So balance sheet always balance, because that's what I call balance sheet. How much you have, how much you own, net is your net worth, but both is always balanced. So we always call balance sheet, right? So you cannot have one hand to go this way, have more borrowing than your thing, then you mean your negative balance, right? So that's something that you always watch out for. But in the business operation, the balance sheet is only looked at for accounting purposes, for auditing purposes at the end of the year. In between the year, maybe people look at that. But along the way, most of the business don't track it. To be frank with you, so far, most of the business are dealing with, even the business owner or top management, we don't track the balance sheet because it's something that always balance. We always concerned about is the profit and loss, because that is to tell you about how fast that year the business growing. And in the balance sheet, normally our main concern is this current asset, which is how much cash do we have left, how much account receivable we have. If this one keep on growing, but you're not converting the account receivable to come cash, your business is not healthy, right? It means you sell, people owe you money, people don't pay you. So if people don't pay you, you have a cash problem, right? So you need to change. So normally we monitor very closely is account receivable. We look at the aging of the account. We look and see invoice that are issued, is it 30 days, is it 90 days, is it 180 days or 360 days? So I need to track that very closely, because if people don't pay me the bill within the 30 days period, I start having to chase, right? So that is something that you as a business owner, you need to make sure that when you do a sales, you don't want to have a very high sales, but you're all sitting down, no money collected. So you always have to balance off between getting the revenue growth, at the same time you're getting the payout, right? One, you cannot convert your sales to become cash, then you ended up with a bad debt, right? You sell the goods, but you need to pay your supplier in cash, right? So your supplier normally will be on this side. We call it the account payable on the liability side, right? So on the other hand of the balance sheet, this is the asset. You have the liability, which is your short-term debts, right? And the trade account receivable and other accrual. Accrual, I mean like the rental haven't paid yet, or let's say your telephone bill haven't paid yet, that's fall under accrual liability, right? And then the long-term debt is something that you borrow on the loan from the bank, or you borrow the loans that's long-term. Let's say you borrow a 5 years term loan, right? So then the first year term loan is fall under as what I call as a short-term liability, short-term debt. Then the long-term, the remaining 4 years will fall under as a long-term debt, right? If you're taking a 5 years term loan, yeah. So as I say, this is it. Then the next one, when you have asset liability, you have the next one is the equity, the box there. So this color actually gives you a good sense of what is more important is the asset, the liability, then your equity. So your equity is your common share, it means the owner capital that you put into the business, and how much is your profit, you call retained earning that you have, and the revaluation reserve. For example, let's say it's your equipment or your land. Last time is you buy at let's say $1,000 today, $1,200, then you got the extra of $200 here. So that's all balance off. But as I say, balance sheet, normally in the business, you don't really track it so much because it's just attacking the health of the business. The thing that people track in the balance sheet as a financial controller is always looking at is how much do I owe people, which is account payable here, and how much do people owe me. All right, so this is the most important, because you need to know if I pay, let's say in this scenario here, you can say that I owe people at the end of the year, it's only 550, and this is end of 550, not so bad, means I can match it up. But in the beginning of the year, I owe people only $100, but people owe me $1,100, right? So you always make sure that your account receivable is always converted into cash. If you owe people, fine, it means people are financing you. You don't pay a supplier yet, it means the supplier is financing you, right? You don't mind higher amount of this, but you don't want this to be high, because it means that you're not collecting your money fast enough. You're not converting your money fast enough, right? I remember my previous company, we at the beginning of the COVID, we have some financial issue because of the account receivable not fast enough. And we focus on collecting the money. So we're actually chasing all the debts because a lot of the debts are about 60 days, 90 days. And during the COVID time, you know, like every company are impacted and some of the company are unable to pay in time. And because of that, I think that is where we have, I think, 2 companies that actually go bankrupt because they're caught in a situation whereby the business completely cannot sell and all the license fee that they're unable to pay, and ended up we got no choice, have to write off the debts. So this is where a company always have to make sure that your account receivable are healthy, right? If let's say your sales is 10,000, then this is 1,000, this is about 10% sitting down there, right? But if you're not converting this fast enough back to cash, you're not collecting it. So financial controller always monitor. Sorry, yeah. Let me just. Yeah. So financial controller, you always have to monitor your account receivable because that is your main cash line. You can easily convert from there. If your money you collected, then your business is growing. Your money not collected, your business are not growing fast enough. Yeah. Okay. Let me move on from there. I think time check. Yeah. Okay. Okay. This is a balance sheet template. I have this template inside the what I call the template that I created that at the end Wally would share that one. So this is a simple template, okay, that will actually help you to lock in your number if you want to do Excel basis. But if you're using accounting software, for example, like this Xero, Zolo, and others, you know, MyYop and everything, normally this will actually give you a good balance sheet. But if not, this is just something, if you do everything manually, this could be a head start for you. Then you know what is inside, what is not outside. Yeah. So normally you start off with the asset, current asset, you have the property, you know, and other thing, this is supposed to be non-current asset, a fixed asset. Then you have the current asset, etc. That will give you a total asset, right? Then, like as I say, trade receivable always have a bad debt provision, how much you can see, right? Property, you have your property, then what is the depreciation amount that you're going out, then the equipments, right? And this is where you can see the most liquid is always your cash and the bank balances, because this is something that you can easily have it, right? And in this example here, you can see that, right, the owner capital is about 100,000. You got the retained earning of 10,000. Then current year you earn, but they also pay a dividend, right? Dividend is something that you take it out as an owner, right? Every year you pay dividend out, or sometimes company don't pay after 2-3 years, they pay one time. And then your net, how much do you have from there? Then how much you're borrowing? Then liability, like bank loan, trade payable, taxes payable, all this are actually created. So this is a simple template that you all can use and play around. All this wording here, feel free to change what is necessary for you, but this is just a sample. Yeah. So at least you give a template that you can actually simply put anything that you think you have. For example, like you don't have raw material, then maybe your case is, oh, this could be other fee, then you can change it accordingly as well. So this is just a template. Yeah. Okay, there's a balance sheet. Okay, let's move on. Liquidity and cash flow management. Right? As I mentioned, cash flow is very important. Okay. Yeah, just like everyone, right? You can have a good business, but you don't have the cash, then you have a problem, because cash flow, we call it in the accountants, we always call it is a bloodline to a business operation. Right? You know, blood is very important, right? You can be very healthy, strong body, but your blood got stuck. Oh, you're a big problem, right? Right? You get stuck in your blood somewhere, and then you got a stroke. So same thing in the business, is a bloodline. You don't want to get stuck, because when you have stuck, you're going to get a stroke. Right? Somewhere, somehow, you either recover or you're not recover, is a great thing. But it definitely is going to impact you. So you don't want to have your cash flow impacted. So always monitor this. If you're a business owner, I would say, let's say as a small, medium-sized business owner, always monitor your cash flow. Because your cash flow will actually give you a good indication whether your health of the business. Right? If your cash flow is healthy, you're always healthy. So it's a liquidity. It's a cash and liquidity to fund your expansion and grow. And as I mentioned a lot in the balance sheet just now, is the collection of the AR, account receivable. Right? So your account receivable and the debtor aging, that's where you monitor very closely this one here. Right? So this one is where you are very important, because if you don't monitor this closely, you will ended up a lot of growth, but then no money. Then you get stuck. Yeah. So this is where you need to. So cash flow management, there's a lot of technique. We are not covering today. As I say, one of the ways we reduce certain way of paying or delay paying some supplier is part of cash flow management. If let's say you have limited, so sometimes what we do is we instead of we getting a pay our creditor on 30 days, we say, okay, we negotiate with the creditor, can we pay you 60 days or 90 days later? Then you actually give you more money to roll, right? So there's something is a management, cash flow management technique. Then we chase up the debtor. So sometimes when we chase the debtor, we kind of give them, okay, you can't pay me this amount, is overdue. Can you pay me 30% first this month? Next month I give you another 30%, the following month 30%, then 40%. So it's part of the management technique, right? So sometimes you need to negotiate, right? On paying people you delay, but collecting money you want to collect fast, right? So at least you got money to roll to pay your bill. So when you collect the money fast, how do you do it? You can actually negotiate. So like in the past, I negotiate with one customer. I think the over is about 800,000+. So I can't go in negotiation. I said, why don't you pay me in the 4 installment? And they say, okay, not so bad. So they pay us by installment. They break down into 4 installments. So we collected installment every month, everything. So I say, okay, we charge you interest, minimum interest, but you pay us an installment, then we will stop the interest charging. Then it's a win-win situation. So this is all what we call cash flow management technique. Yeah, because that is where you need to have that. And one, the last thing you don't want to have the liquidity crunch. Okay, it means like your desperate situation, you don't have the money to pay or your employee's salary, your staff was complaining because you cannot pay the bill, and the landlord will come and chase after you, right? Because you never pay the rent, they're going to kick you out. So this is called liquidity crunch. And during that time, you need to seriously plan about either capital, put in more money, or you take the loan. Right? But sometimes when it comes to this point in time, it means you're not doing your forecast properly. You don't want to get in a situation of liquidity crunch. If you go back a little bit of my earlier slide in the forecast, let me move out a bit. Yeah, I think remember that once you make sure that you have that forecasting of how much you see your revenue coming in and how much cash you're going to get. So this is one of the most important as a cash flow, right? Because it gives you the liquidity of the business and there to avoid the liquidity crunch. Nobody like to be in the liquidity crunch. This is like you owe the money to the bank, you got no money to pay them back, and they will chase you and they're sending you notice after notice. If not, they're going to kick you out of the house or take away your car, or take away your things. So this is called liquidity crunch. So as a business owner, don't get into this situation. Always forecast properly, collect properly your debt, and plan ahead. And that's where your forecasting is important. Yeah. Okay. Next one, this is a template that I created. So this template, you all can use it. Basically, just put in the number, then the number will keep on running from themselves. Hopefully, all the formula are set in place. It's easy to understand. So normally, you do a forecast cash flow. You do a cash flow for 12 months. So you can see the, say, for example, I say this one here, the first month, how much is the beginning cash I have? What is my cash flow from operation? So it means that these are the sales to a supplier, and how much do you pay the employee's salary, and how much the interest. So these are actual cash movement, right? How much is from operation side, you can get cash, right? From operation, okay? Then how much do you get from investing? Sometimes you have some cash flow from sales of your property, collection from principals, repayment, sales of investment. So these are all collection. Then what is outflow of that, right? Then what is a financing cost? Either financing is like, if you sometimes company might, I want to issue more share, issue more bond, then I will get more cash coming in. Right? So they will actually give you a good sense of where then where is the cash are being paid. So you repay, for example, this is a situation whereby you redeem some stock or you redeem some loan, then this is a thing. Then you will get the net amount. Then this amount will actually become your opening balance the following month. right? Then this is how this is running. So if you key in the number in the template here, then this number will keep on changing. Then you know at the end of the year how much you have. So normally you try to have actual in January, how much your sales, how much you pay out. So you got the financial number in, then actual in February, then you can give you a good sense where you are. Then for example, let's say, if you know that you're going to have a pay certain thing in November, then you put in the number in November, then you know in November you're going to incur that expenses. And then you know, oh, by December, I need to pay bonus to staff. There are better plan for it now, right? Because the year end, I need to pay them Christmas bonus or New Year bonus, everything. Then how much do I need? Oh, I don't have enough. Then you start planning for that because it could be dropped. This sign can be turned into negative. It means that you're a shortage of fund. Then you see, okay, do I sell more share? Do I get more borrowing to pay for it in November month? And December I can pay my salary. Yeah. So this actually give you an indication of your cash flow. So you can use the template. Yeah. Okay. Next one is information dashboard. I think we almost come to some of the slide. Okay. After cash flow, the next one I'm saying that, as I said, in the past, I've seen some company they've been using a lot of Excel or a lot of simple accounting software just to get the data capture. It's fine, perfectly fine. But in today's information world, it's important that we must be able to transform all this complicated set of information into an infographic. I like to use infographic a lot. I like to crunch my number data. And sometimes I use an Excel sheet, I pivot it, everything. I come up with a chart. I come up with some simple indication, and I use that to deal with my so-called business partner, which is, let's say, the general manager or the VP or the BU lead, right? We call it. And from there, to them, they are not financial literacy. So if you throw them a set of Excel sheet, all the number, right? It's good, it's a data, but it's not going to tell you a story, right? What you want a set of information is you want people to look at a set of information and people can see the information at 3 seconds. I can tell exactly. If you give me a set of data number, you have to look at left, right, up, down, and you don't know what you're looking at. Correct? Right? Just like your bank send you a statement. Sometimes it's just like all the data, just look. But you give a chart, a graph, it's easy to look at. Right? Oh, it's up or not. Right? Say about, for example, like in Singapore, we receive our so-called utility bill every month. And utility bill come in such a way, oh, this month I spent $150 on my electricity. Last month I spent $130. Then give you a chart. Then let's compare against other people in your area. Oh, they are using $160. I mean, I'm underspending. But if they're spending $100, I mean, I'm overspending. So that is time give you a very, very good infographic. So as a financial people, I would say we always try to transform the complicated set of data into infographic, and then for ease of management overview. And that is actually help you to make a decision, because in one glance at a good, what I call infographic graph, we call the 3-second rule. We look at that from 3 seconds, we can tell the story whether it's good or not. If you can do that, that's perfect. That's excellent. That helps decision making. Then you know what is it. And this is a very powerful tool for a simple business review. I like to use that because in a business discussion, that actually help the business owner or the business partner to have an overview, because they're not from financial literacy, but an infographic will tell you very powerful information about how is a business going, are they going in the right direction or not. And this is where more and more company, especially high performance company, are actually adopting this. That's why, as I say, it's high adoption by high performance company to track key data. And the data analytic is for actionable insight. Because if a finance people produce, like for example, if you produce a set of financial information, like we go through P&L, we go through forecast, we go through cash flow, we go through balance sheet. You must think, what is all this data about? It's actually to give you an insight into your business. And the next step is what? Insight into business tell you a story, but it must be actionable insight, something that you need to take to grow your business. Correct? Let's say today you know that you're going to be short of cash in September. So what are you going to do? Are you going to wait for that to happen? or you start taking action now. Oh, I need to do more sales, more promotion in the month of June, July, August, so I get more sales. Then they cover my shortage of fund. So that's why I call it the data is to drive actionable insight for a company or person or business to take action. Yeah, that's why nowadays there's a lot of new job being created. We call it data scientists and the BI analyst, right? Business intelligence. Yeah. So next slide, you can see this is a simple. Is it easy to see compared to a financial data? Give me a good thumb or hand if you say it's not. Give me a down hand. You say very hard to see, or good up. Good. It's easy to understand from one glance. Right. So for one glance, you can see, you know, for example, let's say if I'm a company here, right? I can see I got 73 contract. My revenue for the next 12 months is 13,000. Cost for the next 12 months, wow, this is not healthy because this is negative. Then I can see how many contract under review, how many contract is being assigned. Then I can see my cost, everything, right? So I see contract per status. So this is like consulting project. So I can see all my project consulting, where the revenue go, where the cost go. Yeah. So the next one you can see another one simple. Let's say this is a student. Let's say a school, for example. I can see I got 1,500 number of students. I got 25 lecturer. I got 120 classes per month, right? Then I can see my revenue, you know, every month. I can see my what I call average fee per student, then the passing rate, you know, and failure rate, everything. So this is very easy. A layman or management people who are, let's say, they're not financially trained, they look at it, is tell you the key data. And all these are infographic, we call it. And it can be very powerful, very thing. Depend on the people who structure it, what you want to tell, what story you want to sell. Yeah, if you want to sell a story about information, about the thing, then you can say, oh, my student is growing, you know, how many expenses I spend, what's the revenue. And these are all key data, we call it. So it's important when you do a business plan, if you come to the level of getting somebody helping you as a management, sometimes because you're not financially trained, what you want to see is these are the key data. If I'm a owner of a school, I want to know how many students I have, how many lectures do I have, how many classes do I have, what is my average student, right, fee and everything. Right, same thing in every business. So let's say I'm a consulting people, I know how many contracts I have in hand, how many revenue I'm going to generate, right? What's the shortage of things. So these are called infographic, just a sample, right? Okay. And I think we almost come to the end of the slide. So let me recap. I think this is a key takeaway for a successful business plan. Okay. First of all, I would say always have to start out with historical data for comparison, because you want to make sure that you have some data that you can compare, because financial data by itself only tell you at the point in time, but it doesn't tell you a story. So when you compare the past 2 years versus current year, then you can see the trend. So most of the people in the business want to see the trend of the business. So historical data for comparison is very important. You must have your current and the future forecast for growth. This is where you anticipate whether you have enough money, you have enough business or not. If not, your business is going downtrend, then you need to do something, or you're in the wrong business, you need to pivot and start changing. All right. Then the key metric of the business, always, as I say, always the top line revenue. Then you have your gross profit, which is important because you have your profit. Then when you have the profit, you can pay for your expenses. Then you have the net profit and the net cash flow, which is all these are key metrics. If you keep track as a business owner, you always keep track in the top revenue, your gross profit, and the net profit and net cash flow. These are 4 numbers you need to take care. No need to take care a lot. Maybe the next one is how much money you have with the net cash flow, right? And normally you have to cover all the real and the relevant cost estimate if you do forecast. Right? As I mentioned, if you want to do expansion, you cannot expect only have one shop and continue to expand. You need to expand about manpower and resources as well. That's why I call expansion plan. And the other thing you need to show is your year-on-year growth. If your business is not growing, it's no good, right? But business going down is also no good, worse. But if you need to grow, if you can grow faster, that's where investors looking at. Because investors are very interested in looking at this one. Yeah, I highlight it a bit here. Yeah, investor always looking at growth, because you don't want to invest in the business that is not growing. You want a business that continue to grow, right? Because it's only when you grow, you expand, you grow, you expand, you're getting more. I mean, your cake getting bigger. When your cake is getting bigger, it means there's more profit to be shared by everybody, right? If I'm going to pump in, let's say, 100,000, $1 million, or $10 million into the business, how much can I get out? It's very important. So investor always look at all these key metrics, your growth rate, right? And how do you grow? How fast can you grow? Then they say, okay, if I'm going to give you X amount of money, can you grow 2 times faster than your current growth rate? Let's say today you grow at 25% every year. They say, okay, I'm going to put you more money, but can you grow at 50%? Then they say, if you need 50%, what do you need? What help do you need? What marketing do you need? Then you can start thinking about all these things, which is a real thing for your business to grow, right? You want to build a business that continue to grow, then they give you a very good, comfortable life. Yeah. Yeah. Then in the business plan, as I said, key takeaway from here, these are the things that you have to be aware of. And you must also include the challenges and the blocker. What is your challenges in the business? What is blocking you from growing, right? So you have to be aware of that as well. And if you raise some funding, if you're asking for funding from investor, you must tell them, how do you want to use the money, right, to hit your target, right? If you have a target revenue, how do you raise the money, and what do you use it for? And last but not least, always keep your business plan simple and realistic, right? You don't want to have a thing like I've seen some people doing, oh, I'm a startup company. In 3 years, I'm going to be a unicorn $1 billion company. I said, you must be kidding me, right? Right? Unless you can say that you create something like, a pill that everybody will eat and become healthy again or become very young again, then you can, that's okay. Everybody in the world, 7 billion population will buy from you, right? Right? So a lot of people, as I say, always keep it simple, keep it realistic. You understand, investor understand, everybody understand the business. That is a good business plan. And financial data, same thing as well. If you look at what we go through, P&L, balance sheet, right? Forecast, budget, projection, is a set of things that your financial people can help you. But if you can transform that into an analytic, simple one, you only need to track these 4 key data, right? And your growth rate. Then that's why you call simple. So once your revenue is growing, your gross profit will grow. If your gross profit is not growing, your costs are too high, you need to adjust for it. If your earning before tax is negative, it means you're paying too much expenses. You need to reduce your expenses, right? If all is good, whether you have the net cash flow or not. If not, it means your money have been locked down into the account receivable. People are not paying you fast enough, so you need to chase them up. So once you manage these 4 items in your P&L or in your business, you're in good health. And the next thing you need to do is to show the growth of the business. And with that done, you can ask for money from other people. Okay. And that is the end of my presentation. So I would like to say thank you very much. This is my contact number and my Gmail address. If anything, you can always WhatsApp me, and you can always drop me an email if any issue. So now I think
thanks, Jeff. Let me say thank you, Jeff.
Yeah.
It's been incredible. I've been watching it. I've learned something myself. Thank you so much. Everybody, please give a big hand to Mr. Jeff C. He's a guest speaker today, and he's an expert in the financial industry. And we hope that Jeff will grace us in future on another topic. And please tell all your friends and all the other students to join us. But Jeff, thank you from us and from everybody here. It's been, the students are messaging me. They terribly enjoyed you. They are terribly thrilled to have you here. Thank you so much, Jeff.
Thank you, Wally. And it's a great pleasure for me to share some experience. As I said, I want to make sure that, because in finance, normally it's very dry because you're talking about number and cents, but I want to make it more lively and make it more understandable, easily understand. So as a business owner, you are not an accountant by training. Sometimes you'll find this, hopefully to find the session informative enough. Then you, as a business owner, you can think about this thing in your planning. Yeah.
Jeff, if you can stop sharing, and what we'll do is, if you don't mind, is ask anybody who'd like to talk to you to raise their hand, and you can unmute their microphone. Maybe you can talk to 1 or 2 students, and whilst you do that, I'll put the material in the chat box for them. Would anybody like to speak to Jeff? Would you like to wave your hand, and Jeff will open your microphone for you? Go ahead.
Okay, I saw, who is that? Okay, let's go lady first. I saw Maria.
Yeah, just unmute her microphone, Jeff.
Okay. Let me see. Ask to unmute. Let me see how the. Okay, Maria.
Hello, sir.
Hello.
Good afternoon.
Yeah, afternoon.
Well, this is an interesting and a very good topic for me because from successful entrepreneurs, learning my failure is important. So, entrepreneurs fail into the trap of feeling infallible to some extent. They think that every new business venture is going to be their success, which is wrong expectation. Because I had a grocery store last 2018 and lasted only 2019. It's not because of the customer, because I earn like 20 or 30,000 per day. And I always knew that my business could make some good money. So I spent 1 million pesos for that business. But that business failed, and I found it to be lack of dedication, and the staff and the people I trusted was stealing money. So I just want to ask some questions. Was my decision wrong or right to close the business, or rather I should gamble money to start again and spend money?
Okay, I think thank you for sharing a bit about background about the business itself. I think there's a good way for everyone to learn. But again, I think what you have gone through is similar to a lot of business owner. I personally invested in a few business. I know the pain of running a business. I know that sometimes you cannot control what you cannot control. So in the business, normally you try to control what you can control. When it comes to a business decision like what you are facing right now, it would be good to look back and understand your business again. Sometimes you have to step back and look at, okay, if this business is still growing, right? And then if you're still growing, first of all, of course, it's entrepreneur, always a passion, right? You still have the heart in the running the business. If yes, that is easy. Then second thing you look at is, what is my problem in the business? Is it because the cash flow, or is it because the people managing it? If people, you can replace. So you control what you can control. If the business is because of no more customer or customer change taste, then no choice, you have to change, you have to close it down, right? But if your customer still have a demand, you still can grow the customer, you think that you can grow, maybe you have the wrong set of people managing it, then you have no choice, you have to cut and change. Tough decision, but it's for the help, because you are in the business not for charity. Bear in mind, right? You're in the business because you have to take care of your family, you have to take care of the people that dependent on you as a business owner, right? So in order for you to do that, you have to make sometimes tough decision, right? So as I say, I'm not in your business, but you can look at all the numbers and everything again. If you still have a healthy gross profit margin, but you're not getting enough net profit because of certain costs are high, then you have to cut away your cost, you reduce immediately, you can turn into profitable, right? Or because your business is growing, your profit is there, but because you don't have the cash is issue, then your collection is an issue, right? So the number doesn't lie. There's one thing good about that, right?
Okay,
so
thank you, sir.
Yeah, okay, thank you. Hope that answer yours answer. Okay, next one I saw is Eliu, is it? Eliu Sowe? Let me unmute. Okay, hold on. So let me unmute. Okay,
Hello.
Hey, hi. Yeah.
Evening.
Yeah, good evening. Yes. Where are you from, Eliu?
I want to ask two questions.
Yep.
I want to ask two questions.
Ellie, you're breaking off a little bit. I'm saying it's very, very
Like the
Hello. Hello.
yeah, I'm from Gambia.
Oh, from Gambia. Okay, yeah. Maybe what's your question that you have? I can't hear you, Elio. Sorry for that.
I think his microphone is gone, Jeff. Just move
Okay,
on to the
okay.
next
Then
person,
maybe
please.
let me mute you first. I give other people a chance to talk first. Yeah. Barnish is Barnish. Is
Yeah.
it? Yeah, I mute you.
Two
Let me mute.
questions. That's
Okay.
I mean the difference from
Sorry, Elio. I think your sounds a bit break up, so I had to mute you first. Let other people talk.
hello.
Yeah.
Hello.
A bit lag.
Okay. Does anybody else want to talk to Jeff? Wave your hands or give him a signal. Anyone else? Thank you, everybody, for the compliments, Jeff. Compliments are pouring into you in the chat box.
Okay, great. Thanks.
Shady
I
Nasim,
tried to answer.
Naeem, thank you for your comments.
Yeah, I tried to answer one or two more questions, so I know that.
Yeah, go ahead. Anybody else would like to talk to Jeff? Please speak up.
Okay.
Shady, would you like to talk to Jeff? Would you like to unmute your microphone? Shady, can you
Shady?
unmute Shady's microphone, please, Jeff? Shady Naeem Hussain.
Okay, the problem, I can't unmute him. Maybe Amara, can you help to unmute that?
Yeah, it's unmute.
Hey, hi, Shady. Yeah, hi.
Yeah, go ahead.
Yeah, thank you for the presentation. Actually, we have learned a lot. Just I have small question about liabilities.
Yep.
And the assets.
Yes.
Okay, and one more issue, I keep hearing in the company something called LC or the letter of credit.
Okay.
Just can give me little information about that. It will be very helpful for me.
Okay. Okay. Letter of credit is for those who are, if you're doing international trade, normally letter of credit or the LC is a way of financing. So for example, let's say you import something from another country. So I believe your company, Shady, hold on, yeah, unmute. One. Let me try. So sorry, because it's unmute. So let me try to unmute you again, Shady.
Amala, can you help to unmute Shady Naeem Hussain, please?
Yeah, it's unmute now. Thank you.
Okay,
he's unmuted.
Okay, Shady, I believe your company must be doing some import and export company.
Yes, we are working in pharma industry in Saudi Arabia.
Correct,
so
correct. Because you're from Saudi Arabia, right?
From, yes, other countries.
Okay. Normally, the LC or letter of credit is only involved when a company are involved in overseas trading, import and export. So, for example, let's say you're some overseas customer, you want to buy something from overseas customer, right? But they don't know who you are. So, for them, before they can sell you the thing, one of them is for safety. They will ask for a letter of credit. So your company would have to go to the bank, ask the bank to issue a letter of credit to the seller, and the seller will say, okay, fine. For example, let's say I buy 100,000 of let's say grain from a company in let's say in Canada. They don't know who you are, but they say, okay, give me a letter of credit, right? So when you issue an LC, that means the bank will actually pay them the moment they ship the good to you. Either you pay them or not pay them, you have to pay the bank. So, but the bank will release the LC.
They should by the bank, not by the company. I mean, yes.
Correct. You pay the bank, but the bank will release the money to them on the other side. So, it means they got the comfort that you're real, and the sales is a real sales. So that's why they want the letter of credit. But in your balance sheet is a liability because you have to raise the LC. You have to pay the bank, right?
Yes.
Right. Yeah. But then the customer will actually have the money because you pay the bank pay them. right? So you
Okay,
set
so the
your-
bank is in between the company and the other company. So to
Yeah.
avoid any risk for both. Okay.
Correct, correct. So they don't need to wait for, because they don't know who you are. Because they
Yeah.
if they shift the good to you, you're not paying them, then they got problem. Because you're in Saudi Arabia.
It's a clear now.
Yeah, so
Another
then-
question, the fixed variables and the fixed asset and variable assets.
Yes.
What's the difference between in terms of like labors, land, or such things? How can we make sure that this is fixed asset or variable asset? And I had a discussion like the labor salaries. Someone was telling me it's fixed asset. Other one was telling me no, it's variable asset.
Okay.
Just want to have details about it.
Okay. To answer you is very straightforward. When in the accounting term, we have a so-called guidance by the accounting standard as a accounting. So we have to follow the rule, so-called practices. Anything that you have to pay within a year, within 12 months, right? Let's say this year, your year end is 31st December, but anything you need to pay for the next 1 year, right, is considered short-term liability.
Okay.
Yes. So that's on liability side. On the asset, same thing as well. Anything that is you hold for one, let's say your cash balances and everything, but anything that's more than a year you need to pay, right? It's going to be long-term liability.
Okay.
Yeah. So in accounting rule is the current and the non-current differences is either within a year or more than a year. More than a year considered non-current.
Okay.
Yeah. The asset side. So same thing in the liability side. Anything you need to pay within a year, right? Normally there is a trade creditor. Is all this considered is a current liability, and anything that is not is going to be a long-term liability. So is the example, for example, let's say you borrow from a bank a 5 years loan, right?
Yes.
Right? Loan. If the first 12 months that you need to pay is considered current, then the remaining 4 months, the remaining 4 years, the first year you need to pay, the next year you need to pay amount is considered current. The remaining 4 years not due yet is considered long term. Yeah.
Clear.
Okay.
Thank
So
you.
the break point is 12 months.
Thank you.
Okay, welcome. Yeah. Anybody have question? Anyone?
Okay, well, thank you everybody for having us here tonight from all of us here at Empire Inc. Holdings Private Limited in Singapore and Kingston International School. We thank you for joining Mr. Jeff C. and myself tonight. Let me just remind everybody that we are on Facebook, we are on Instagram, and we are on YouTube at the Apex Stories. Please visit us on YouTube. You'll find a video of tonight's BizTalk 42 available tomorrow morning, and you'll be able to watch Mr. Jeff C.'s presentation once again. From all of us here in Singapore, good night, everybody. Good night, Jeff. I'll talk to you soon. Thank you, everybody.
Thanks.
Good night,
Thanks,
Mr. Amala.
everyone.
Thank you, everybody.
Okay, bye-bye.
Goodbye.
Bye-bye.
Bye-bye.
Thanks.